Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn about break of structure, change of character, inducement, higher high, higher low. What is this? Okay, so this is a very important structure mapping video and you will learn all about inducement, break of structure, change of character, all about these things. Before these all things, you have to understand what is impulse correction. As we understand in our first chapter, what is a impulse and correction in terms of the candlestick form. Now we are going to learn about what is impulse and correction in terms of the structure. Impulse mean when momentum is a bullish continue going upside, that's called impulsive move. When market taken out the pullback, that's called a correction move. And same thing will be apply in a bearish market when market rapidly push downside and then market take a pullback to the upside and then market again push downside as a continuation, that's called impulse and correction and continuation. So in this chapter, you will learn all these things in a details. So first of all, you have to understand what is impulse. In a both diagram, you can see market momentum is a bullish. So first one is here, you can see, right? So this one is our impulsive move and this one is our corrective move and this one is also known as a impulsive or you can say continuation move. Why? First one, you have to understand here, this one is our small correction. Again, market taken out pullback, again go higher. So this move act like a impulsive move. Why? Because in this case market not taking out any previous low, so this move act like a impulsive move. But in terms of the candlestick, this one is our impulse and this is a correction, impulse and correction, impulse and again large correction as per the structure formation, right? So this is our candlestick form based as we discussed in a chapter 1. But if you are looking as per the structure mapping, so this one is our single leg. So when and where is our correction? Correction means when market taken out the first pullback, which one is our recent pullback, that's called our corrective move until taken out the previous low. These three candles are our bearish momentum and you can say in terms of the structure, this is our corrective move, impulse and correction. Why this is a correction? Because this move taken out the previous candle low, means previous pullback low. This is our correction and again market push higher and this one is also our impulsive move or you can say continuation move, right? In the next diagram, in a B diagram, same thing happen here, small correction, again impulse, small correction, again same thing, and this move act like a single move. Market take a pullback. Why? Because market taken out the inducement. If market not taken out this inducement, okay, so what is this? Like this, if market not taken out this inducement here, okay, so what is this? This become our single leg move like this, okay. So this move act like a single move. Why? Because market not taken out a previous inducement is here, that's why this count as a single leg move. So to confirm any structure like in a corrective way, market at least taken out the previous structure low. In terms of the candlestick, market taken out the previous candle high or low to confirm a valid pullback or you can say correction move. I hope you understand what is the reason to mapping the impulse and corrective move in terms of the structure, in terms of the candlestick form. Now the next point is inducement. What is a inducement? Inducement means when market momentum is a bullish continue pushing upside like this, okay. So first pullback is a called inducement and this inducement confirm when market taken out this low. If market not taken out this low, so this is not a inducement. Maybe market can go higher like this, okay. So this low become our inducement if market taken out this low. I'm talking about in bullish market structure, and same thing apply in a bearish market. If market momentum is a bearish and this is our impulsive move, okay. When market taken out the first pullback, this move is a called our inducement and then our lower low is a confirm here, right? And then what happened? Market push higher, again break this low. This one is called break of structure. I'm talking about this one, okay, and this become our break of structure. So first of all, you have to understand what is inducement. Inducement basically confirm when market break the structure, means when market break the previous measure high or low and candle close above it, that's called break of structure. In this scenario, you can see this high break here and candle close above it. So this is our valid break of structure, and to confirm any break of structure, market must be close above previous measure high in bullish market and previous low in bearish market. So this is a definition of break of structure and inducement. In this case, after break of structure, where is inducement? Market, you can see, take a one pullback and push higher. So in this case, where is inducement? Inducement is here. If market taken out this low right here, this one is our inducement, and this higher high will be confirmed here like this, higher high and higher low. And when this higher low confirm, when market break this high and close above it, this higher low only confirm when market break the previous high and close above it, then this is our higher low. But this higher high will be confirmed when market taken out this low, right? And you will understand more better, easy to understand when I will switch on a real chart. Okay, so this is a quick diagram to understand thing that how you can map the structure on chart. To confirm any break of structure, market must be candle close above previous recent high or low like this. I'm talking about this high. Okay, and to confirm any inducement, market can be taken out and market can be close below it, doesn't matter, right? Main thing to confirm structure is a candle closing important. To confirm any inducement, market no need to close or sweep, and candle color also not matter here. Okay, and this can be a more deeper pullback. For example here, okay, this is our break of structure, and then market can be go higher. Okay, and then finally what happened? Market take a pullback at this point, so this become our inducement, right? If market not taken out this inducement and market moves something like this, so this become our inducement. If market taken out this low, you have to wait for taken out the first recent pullback, that's called inducement, right? Now switch into the next diagram. On a B point, you can see similar situation, a small pullback and continue pushing upside. Then what happened? Market taken out the previous structure low, which is a minor low, is here. After taking out this low, after taking out the inducement, our higher high is a confirm here, and then market can be more little bit downside and then push upside. Okay, so once market close previous major high above it, so this one is a called a break of structure. But if market just sweep this liquidity like this, you can see this is a very long shadow, but market not close above it. Okay, if I delete the next candle, which one is here, so this one is a not a break of structure, this is a liquidity sweep. So this is a liquidity sweep. Why? Because price not close above it, so this is a invalid break of structure and we can't trade based on the break of structure. This is a liquidity sweep and we are looking here for sell as per our entry plan, which will be include in next upcoming parts. But if the next candle close just above it like this, you can see market close just above it but not close this candle above it, so this is still invalid here, and this is a not a valid structure, this is a invalid. Why? Because price not close above it. If this candle close above it, for example here like this, so this become our valid break of structure. Why? Because price close the previous major high, right? And this can be one candle and can be a next like multiple candles is here. The next candle can be close above it like this. Okay, so you have to wait for it to confirm a break of structure. Now this break of structure is a valid, so you have to wait for to confirm a break of structure to market candle closer. So this is a definition about impulse and correction, break of structure and inducement, and same scenario will be applicable in a bearish market. If I invert this chart, now you can see both structure are similar, market condition are different, because in a first attempt market was bullish, now market momentum is a bearish. Same scenario will be applicable here. This is impulse and correction, impulse and correction and impulsive move. This is impulse correction in terms of the candlestick form. When market taken out the minor structure, this one is here, this one is a called inducement, right? To confirm taken out the inducement, our lower low confirm in terms of the bearish market. Okay, and then what happened? Market push downside again, same scenario will be happen, break this structure, but market must be close above it, market must be close below it. So this is our break of structure is a valid. And then where is our inducement? This high, because this is a first pullback. In this leg only one pullback is here. If market create move like this, okay, so where is inducement? This first pullback is our inducement. You have to wait for taking out this. So when market taken out this high, this one is a called inducement, and this is become our lower low, and then market can be little bit push upside and maybe sharply push downside and close below it, and this become our break of structure, which will be covered on chart in a better way. And same thing will be apply here in the next diagram. Impulse and correction, impulse and correction. This is our actual impulsive move right here. Okay, and this one is our correction because market taken out the first pullback. Okay, and then what happened? Market pushed downside but not close below it. So this is not a break of structure. Why? Because market not close below it. So market must be close below it to confirm a break of structure in a bearish market. If this candle close below it, so this become our valid a break of structure like this. Okay, so this become our invalid. Why? Because market not close below it. So you have to wait for to confirm a break of structure. Okay, but market taken out the inducement, maybe market taken out the previous high, and sometime market can be close above it, doesn't matter. Okay, to confirm any inducement, market can be sweep and market can be closer, but to confirm a break of structure, market must be close below it in a bearish market and must be close above it in a bullish market. And the next part is change of character. What is a change of character? Change of character we can identify in a two way. First way, when price tap on a demand zone or supply zone, and the next part is when price not tap on your demand or supply, market momentum is a bullish or bearish, but market break the actual measure high or low and candle close above it or below it. That's called change of character. Let me show you exactly that how you can identify change of character, because change of character will be applicable on two places. First place is when market or not tap any POI. For example, here this one is our bearish market, and you can understand also in a bullish market first. So this one is our bullish market and market momentum is a bullish, and where is our inducement and where is our change of character? Change of character means market momentum is a bullish, something like this. Okay, so this one is our actual structure is here. What is a change of character? Change of character means when market looking for the reversal to the upside or downside, that's called a change of character. You can see in a bullish market, if market momentum is a bullish, and then what happen here? This one and this move something like this, and can be next move something like this. Okay, I'm talking about the actual structure. Okay, so this one is our normally break of structure. When market break the major low, this one, so this one is a called our change of character. In this case, market not tap on your PY zone. Let me show you exactly that how you can mark the change of character. This is our higher high, this is our higher low. Why? Because price close above it. So where is our change of character and where is our inducement? First pullback is our inducement. Why? Because market are in a continuation move like this. Okay, so first small pullback is a valid pullback is our inducement after break of structure, but the actual low is here. This is our change of character. Why? Because if market turn into bearish side and break the major low, which is an indication for the reversal like this. Let me show you exactly here. This one is our inducement and this one is our change of character. If market push downside, taken out this inducement, this higher high is a confirm here as we have discussed here. But if market not trying to hold here, and then what happened? Market push downside and break the previous major low, which one is here, right? Then what happened? This move act like a change of character, and this is applicable when market not tap any PY zone, not tap on your supply, demand or sweep zone. This is a normal structure. Okay, and same thing will be applicable in a bearish market like this here. This is our bearish structure. Okay, like this, and this one is our higher low. First high is our inducement and this is our actual major high, but in this case market must be candle close above it here, right? To confirm any change of character, market must be candle close above it, and this is applicable when market not tap on your PY zone. This is a remember this thing, because this is important, because some people get confused to mapping a change of character and mapping an inducement. Okay, to confirm any change of character, market must be candle close above it, but market not tap on your PY zone. And the next scenario, and this scenario applicable in a unmitigated demand or supply zone. Okay, this is a normal structure, but what will be happen if price tap on supply or demand zone? What will be happen when price tap on POI zone? Then where is our inducement and where is our change of character? So in this case, when price tap on PY zone, or when market sweep the major high or low, or session high or low, means market taken out any liquidity and where we are looking for buy or sell any point. Once market taken out liquidity or tap on PY zone and then market break the first recent high or low, that's called change of character, not inducement. When market tap on mitigated PY zone. When market tap on PY zone, then market break the first recent high or low, that's called change of character. Same thing will be applied in a bearish market. When market taken out liquidity or tap on PY zone, then first recent high act like a change of character, not inducement. Why? Because inducement we use generally for structure mapping. Once market tap on PY zone, then first recent high act like a change of character, not this one, because this is our actual change of character. Because we are looking for buy any point, then we need a recent structure as a change of character confirmation for the buy. So where is inducement in this case? When market tap on PY zone, then no need to wait for inducement or anything. First high is a called change of character. But when we are looking for buy, then we need inducement in a lower time frame confirmation, which will be covered in more details in upcoming chapters. Because change of character is a first indication for the reversal, we use for continuation, we use for the change of character is a first indication for the trend reversal, and mostly we use during the entry in a lower time frame confirmation is a change of character mostly we use. I hope you understand where is our actual structure and where is our break of structure and where is our inducement and where we should not use inducement and where we should use change of character. Remember one thing, when price tap on PY zone, then first high act like a change of character in a bearish market, and same scenario will be applied in a bullish market. When price tap on PY zone, then first low act like a change of character, not inducement. But if price not tap on PY zone, then this is not a change of character, this become our inducement. Why? Because market are continuation and market need at least one pullback to confirm higher high, right? Then market can go again high, which will be covered in entry section in upcoming chapters. I hope you understand what is break of structure, where is our change of character, where is our inducement. This is a very important chapter in this smart money concept about market structure mapping. Now we are going to switch into real chart, that how you can mark the structure on a real chart, which will be applicable in next chapter. I hope you understand where is our BOS chalk and what criteria you should follow to confirm any break of structure, change of character, inducement, and what is impulse and correction. Now I am going to explain all things on a real chart. See you in the next chapter. Happy trading.